morning, good evening, wherever you may be watching this video. In my last video, we covered principal tokens, what they are, and how you can leverage them to earn fixed yields inside of crypto. Today, we're going to cover yield tokens or YTs, what they are, how they work, and when it makes sense to use them. So, with that being said, let's get right into today's video. All right, so first things first, what exactly is a yield token? Well, a yield token represents the right to all yield generated by an asset until its maturity. When you hold a YT, you earn all the yield, you have no principal protection, and your returns depend entirely on future yield. If an asset has no yield, then you have no return. So, to put this in perspective, let's use a simple example. Imagine an asset is expected to earn 30% yield over a year. If you buy the YT, you receive whatever yield the asset actually generates. Yields could be more than expected, or they could be less. If yields rise, then YTs become more valuable. But if yields drop or decrease, then YTs can lose value pretty quickly. I personally consider yield tokens to be high risk but high reward. YTs are effectively leverage exposure to yield. Small changes in yield expectations can cause big changes in YT prices. That makes YTs extremely volatile, time sensitive, and best suited for active strategies. You have to really pay attention to the price of YTs. So if yields spike, then obviously YTs can become more valuable. And then, of course, if yields drop, then YTs can lose their value pretty quickly. So you want to be more active in paying attention to those spikes in yields or drops in yields to determine whether or not you should be trading YTs. As maturity approaches, unused yield disappears, a concept known as time decay. You also see time decay in other investment instruments like options trading, for example. So you're probably wondering what actually drives the price of YTs or yield tokens. And YT prices move based on a couple of things. One, current yield rates. Two, expected future yield. Three, time until maturity. And four, market demand for yield exposure. To help make the picture a little bit more clear, you can think about it like this. Bull markets often push yields higher, which of course benefits YTs, whereas bear markets usually compress yields, which hurts YTs. So PTs or principal tokens tend to be the more safer and obvious play during bear markets. You have fixed yields, you're not having to worry about really the fluctuation of the principal asset, but when you buy that PT, you're buying it at a discount, and upon maturity, you are redeeming that PT one to one to the underlying asset. Whereas during bull markets, YTs are favored for the upside potential. You have that leveraged exposure to yields that can be generated by the underlying asset. Hopefully, that clears some things up on when YTs seem to be the better play. I don't really like to put people in a box because honestly, yield trading, YTs, PTs, it's really for everyone if they're willing to sit down and learn and understand the concepts and practice. Practice with small amounts before you risk larger amounts until you know what you're doing. But if I'm being honest with you, YTs require a little bit more attention than PTs. So YTs are best for active yield traders, bull market participants, short-term positioning because you don't want to hold these things for an extended period of time. You see a spike in the upside on YTs, you probably want to take advantage of that as quickly as possible before they come back down. The YT tokens price comes back down. Traders comfortable with volatility. If you don't like to see ups and downs, especially with yield tokens, YTs are probably not your thing. If your goal is I want maximum upside from yield, then YTs are your thing for sure. So in conclusion, PTs give you a level of certainty. They offer fixed yield and you're not having to worry about volatility while you hold the PT. Upon maturity, you redeem those PTs that you bought on discount one to the underlying asset. YTs give you extreme upside potential, but they're really short term holds. You don't want to hold them for a long period of time, especially the closer you get to maturity. In the next video, we'll do a walkthrough on Spectra Finance, which is the platform that I use to trade PTs and YTs on the Flare network. So with that being said, I hope you enjoyed this video. I hope you found it informative. Please like, share, and subscribe, and I'll catch you in the next one. Peace.